Ever wish you could like get a peek inside those, those huge warehouses that are like powering all the online shopping we do?
Mm-hmm.
Well, today we're doing just that, right? With Symbotic Inc.
That's right.
They're using AI and robots to completely change how we store and ship things. So we'll find out if this is a stock you should be buying
Yeah.
or if it's one you should leave on the shelf.
Okay.
And before we get lost in all the, algorithms and robots and stuff,
Yeah.
hit that subscribe button so you don't miss out on our future deep dives.
What's really innovative about Symbotic is that they aren't just selling the robots themselves.
Right.
They created a whole ecosystem, a symphony of software robots and a special storage system
Okay.
that's designed to get the most out of the space and make everything super efficient.
So it's not just about the robots. It's about how they all work together.
Exactly.
That system-wide approach
Yeah.
has to be like a major selling point for them.
It is, absolutely.
Yeah.
It allows them to offer a complete solution for those really big companies, like Walmart, Target, Albertsons,
Yeah.
who need to streamline their operations. So they get revenue from the initial sale when they put the system in. But they also get this recurring income,
Right.
through software subscriptions
Makes sense.
and maintenance contracts.
Yeah.
So that dual revenue stream, that's super important for them to be stable over a long time.
Yeah, that's smart. It means they're not just relying on those one-time sales to stay afloat.
Right.
But how about the people running this company?
Yeah.
Do they have the experience?
That's where it gets interesting.
Go ahead.
So Rick Cohen,
Yeah.
the CEO,
Yeah.
he's been in the supply chain and automation industry for a long time.
Mm-hmm.
But Symbotic itself is actually a pretty young company,
Oh, okay.
which means that there isn't really a long track record
Yeah.
for us to look at.
So potential,
Yeah.
but a little uncertainty.
Exactly.
Okay, yeah, that's something investors have to think about.
Yeah.
All right, let's get to the really important stuff.
Okay.
Their financials.
Mhm.
How's Symbotic doing financially?
On the surface, things look pretty promising, actually.
Right.
They've had incredible revenue growth,
Uh-huh.
almost doubling year over year in 2023.
Wow.
And they're showing positive adjusted EBITDA,
Okay.
which, for people who aren't familiar,
Yeah.
is basically a measure of profitability
Okay.
that doesn't include certain expenses
Right.
like interest and taxes.
So that's a good sign, especially for a company that's still growing.
Right.
But does this
Yeah.
positive adjusted EBITDA tell the whole story?
That's a good question.
Especially since they haven't been consistently profitable yet.
That is the key question.
Right.
So while the adjusted EBITDA is positive, it doesn't give you the whole picture.
Okay.
And to make things even more complicated,
Uh-oh.
Symbotic had to go through a financial restatement,
Oh, wow.
which, yeah,
That's not good.
it's a big deal.
Yeah.
Yeah, that restatement is a real red flag for investors.
Yeah.
It makes you wonder if you can trust their past financial reports.
Right.
And it also raises questions about how strong their internal controls really are.
That definitely makes things more complicated.
Yeah.
But before we get too deep into those details,
Sure.
let's see what the market thinks of all this, right?
Okay.
How are investors reacting to Symbotic's performance and potential?
Well, their journey on the stock market has been kind of a roller coaster.
Yeah.
Ups and downs,
Mhm.
and then, of course, the recent restatement news.
Right.
But despite all that, Wall Street analysts are still cautiously optimistic.
Interesting.
Yeah, the general consensus is a moderate buy rating
Okay.
with plus targets that suggest there's still room for growth.
So overall, the sentiment is positive.
Yeah, you could say that.
Okay, so what's making them so optimistic?
Well, one big thing is Symbotic's huge order backlog. We're talking $22.4 billion worth of projects just waiting to happen.
Wow.
That shows that the major players really believe in their products and services.
Okay. Yeah, that's a massive backlog.
It is.
It sounds like they've got plenty of work lined up.
Yeah.
But I'm still wondering about that recent financial restatement
Yeah.
and the class action lawsuit, right?
Right.
Those aren't exactly small issues.
No, you're absolutely right.
How are those impacting investor confidence?
Well, they've definitely created some uncertainty.
Yeah.
Some investors are probably just going to wait and see what happens.
Right.
And we've even seen some unusual activity in the options market.
Oh, really?
Yeah, which suggests that sophisticated investors might be hedging their bets
Mm-hmm.
or maybe anticipating that there's going to be some volatility.
So mixed signals from the market.
Pretty much.
Okay, yeah, that's definitely something to watch.
Mm-hmm.
All right, let's switch gears for a second
Okay.
and talk about who's actually in charge at Symbotic. What can their ownership structure tell us about the company's direction?
It's always good to know who's got skin in the game, right?
Right.
Well, Symbotic has a lot of institutional ownership,
Okay.
big names like SoftBank Group Corp.
Uh-huh.
And Bailey Gifford and Co.
Okay.
They see long-term potential,
Mm-hmm.
and that's generally a good sign.
Yeah, having those big institutional investors on board definitely gives them some credibility.
Yeah.
But what about the people inside the company?
Mm-hmm.
The executives.
Yeah.
Are they buying or selling stock?
That's always a key indicator of
What's that?
sentiment.
Right.
So we see that they have substantial insider holdings,
Oh, okay.
which is usually a good thing.
Right.
But there have also been some recent insider sales.
See, some people might see those sales as a red flag, right?
Yeah.
But couldn't it also just be like normal financial planning for those executives?
Yeah, that's true.
You know?
Insider sales aren't always a bad sign.
Right.
It could just be that they're trying to diversify their portfolios. Exactly, yeah.
But it's still something to keep an eye on, especially because of that recent financial restatement.
Right. So more scrutiny needed.
Definitely.
Okay, how about the bigger picture?
Mm-hmm.
Does Symbotic's overall corporate governance structure give us confidence that the leadership is acting in the best interests of the shareholders?
Well, that financial restatement really casts a shadow on their corporate governance. It makes you wonder about their accounting practices
Yeah.
and their transparency.
Right.
They do have guidelines in place
Yeah.
to make sure everyone's acting ethically and following the rules. But they really need to take some concrete steps to address these issues and build back that trust with investors.
Transparency and accountability are so important.
Absolutely.
Okay, we've covered a lot here.
Yeah, we have.
We've seen the potential, the challenges, the market sentiment.
Right.
But to really get a handle on Symbotic's prospects.
Yeah. We need to look at their risks and opportunities from every angle.
Exactly. And that's where a SWOT analysis comes in.
Okay.
It's a way to systematically analyze a company's strengths, weaknesses, opportunities, and threats.
So let's start with their strengths.
Okay.
What's working in Symbotic's favor?
Well, their AI-powered robotics and software platform, that's a clear strength.
Yeah.
It's what sets them apart from the competition. It lets them offer these really efficient and flexible solutions.
Right.
And they're smart. They're protecting their innovation
Yeah.
with a whole bunch of patents.
That's smart. Yeah, protecting their intellectual property is key in such a competitive space.
Absolutely.
And their partnerships, right?
Yes.
With those huge companies, Walmart, Target, Albertsons, those got to be massive strengths too.
Oh, absolutely.
Yeah.
Those partnerships give them a reliable revenue stream.
Right.
They show that there's real demand for their solutions.
Right.
And they also help build their reputation in the industry.
Makes sense.
And they've also been recognized
Yeah.
for their innovative company culture
Okay.
and how they treat their employees well.
So a solid foundation to build on.
Yes.
But what about the other side of the coin? What are Symbotic's weaknesses?
Well, one thing that stands out is that they depend on a small number of big customers.
Okay.
So if one of those relationships were to go sour,
Yeah.
it could really hurt their revenue.
That's a good point.
They've also had some operational challenges
Uh-oh.
and cost overruns.
Not a good sign.
Not really. No.
And we can't forget about those accounting issues
Yeah.
and the financial restatement, right?
Right.
Those had to be considered weaknesses too.
Absolutely. Those issues raise concerns about their financial management, their transparency, and their internal controls.
Okay, so some definite obstacles to overcome.
Yeah.
But let's look ahead, right? What opportunities can Symbotic take advantage of to grow in the future?
Well, the market for warehouse automation is booming right now.
Really?
Yeah, driven by all the e-commerce growth
Makes sense?
and rising labor costs.
Yeah.
So there's a huge demand for Symbotic's solutions, both here and in other countries.
So geographically speaking, there's a lot of room for expansion.
Yeah.
Okay, that's encouraging. A growing market means lots of opportunity.
Exactly.
Are there any other, exciting prospects on the horizon for Symbotic?
There are a couple.
Okay.
Firstly, they could diversify their revenue streams, by focusing more on those recurring revenue models.
Okay.
Like software subscriptions and service contracts that would create a more stable and predictable income flow.
Yeah, recurring revenue is always attractive to investors.
Yeah.
What's the second opportunity?
Their Green Box initiative.
Okay, with that.
They're looking into this warehouse as a service idea. Yeah, basically, companies would be able to rent their automation technology.
Yeah.
instead of having to make a huge investment up front.
Right.
This could really open things up to a wider range of customers, including smaller companies who couldn't afford it before.
So lowering the barrier to entry could be a real game changer.
Yeah, it could, yeah.
But we can't forget about the threats, right?
Right.
What could potentially derail Symbotic's success?
Well, the competition is fierce.
Yeah.
There are new players entering the warehouse automation space all the time. So Symbotic needs to stay ahead of the game and keep innovating to stay competitive.
Right. They can't just rest on their laurels. Innovation is key in this fast-paced world.
Absolutely.
What other threats should investors be aware of?
There's always the possibility of regulatory changes that could impact their operations, particularly when it comes to labor costs and automation.
Okay.
And then finally, and this is a big one, the rise of artificial general intelligence.
Ah, yes, the AGI wildcard.
Yeah.
Could that really disrupt even Symbotic's cutting-edge technology?
It's a valid concern.
Yeah.
If AGI gets to the point where it's more capable than what they're doing now, Symbotic needs to be ready to adapt to that shift.
That's a sobering thought.
Yeah, it is.
So we've looked at Symbotic's strengths and weaknesses, the exciting opportunities and the potential threats.
Right.
But the big question remains, is Symbotic a buy?
That's a tough question to answer.
Yeah.
As with most investments, it depends on your own goals and how much risk you're willing to take.
Okay, break it down for us. What should investors be considering?
Okay. So on the positive side, Symbotic has a lot going for it. They've got innovative technology, strong relationships with customers, that massive order backlog, which shows their strong demand, and they're operating in a market that's growing rapidly.
So there's definite potential for growth.
Yes.
But what about the downsides?
Well, they haven't quite reached consistent profitability yet.
Right.
And there are those operational challenges and those concerns about their financial reporting and transparency.
Sounds like a classic case of risk versus reward.
It really is.
Yeah.
And how much risk you're comfortable with.
Right.
Depends entirely on your own personal circumstances and your investment strategy.
This deep dive has given us a lot to think about.
Yeah, it has.
Before we wrap up,
just
a reminder that all the sources we used are linked in the description. And while you're down there, let us know what other companies or industries you want us to cover in future episodes.
Yeah, we're always looking for interesting investment stories.
Exactly. This deep dive is just for informational purposes. It's not financial advice.
Right.
And if you liked this episode, make sure to subscribe to the channel so you don't miss out on future deep dives.
We're always looking for exciting companies and industries to explore.
Exactly. So tell us in the comments what you want us to cover next.
Yeah, we'd love to hear from you.
Until then, happy investing, everyone.